Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Shawn Douglass, co-founder and CEO of Amberdata, to discuss the convergence of traditional financial institutions with Web3. Shawn, it's great to see you as always. Welcome back to Trade Talks.
Thank you. Pleasure to be here.
You got it. How are institutions currently utilizing on-chain and market data to assess risk, identify opportunities, and diversify portfolios in what's been, a bit of a challenging market?
That is the question, isn't it? So really, on-chain data provides, accounting and fundamentals to inform investment decisions. So crypto trades around the world, around the clock, in hundreds of venues, and is quoted in every major currency pair and in stablecoin. Add to that a growing derivatives market. Institutions really need to have the global context to understand and quantify what's going on. So they really are looking to use that on-chain data for the accounting and fundamentals and the price discovery process across the world.
Which strategies are institutions embracing, such as programmatic trading, liquidations, arbitrage, any others?
Yeah, I mean, just like TradFi, pretty much programmatic trading is pervasive. And more interestingly, there's a huge amount of arbitrage in crypto, especially because spot settled products are fungible around the world and the market is global. So you can really capture price variance across different venues. And you're not just trading on New York Stock Exchange's computer. You have a price discovery process that happens globally that is transparent. So there's a tremendous amount of arbitrage, as well as harvesting yield across forward month, front month, back month, futures, products, and options.
Shawn, what types of data are most important to prepare for regulatory compliance in the wake of recent SEC and regulatory news?
Yeah, that's a good question. There's many regulatory bodies around the world that are embracing digital assets, and they're all really interested in a few things. Pretty much who held what when, at what price, and what were the underlying incentives and the outcomes for those actions. So crypto is actually radically transparent compared to traditional financial markets, and people like Amberdata provide that data for the asset class. It really has never been available before for any other asset class in history, to be able to see everything that's happening in perpetuity and unchangeable record.
How will regulation increase demand for long-term digital asset strategies for lower risk investors?
Yeah, so I think at the end of the day, funds always flow to where the opportunity is. Right now, the US is a bit of a dumpster fire. However, I think that the UK, you have the FCA, and I think Prime Minister Sunak, they're working to make, the UK the global hub for crypto assets. In Hong Kong, you have SFC and HKMA. They've embraced crypto and are open for business. VARA and ADGM in the UAE have done a great job, and they're really attracting institutional players, and money is pouring in there. Monetary Authority of Singapore has long been embracing digital assets, and Europe now with MiCA has laid down clear rules which are going to facilitate growth and transparency. We can really only hope that the SEC will stop pushing business offshore and will continue to grow, because this is going to transform all of financial services. It really is. We got to get our stuff internally together.
Yeah, Shawn, I would agree with you. It almost feels like the digital asset space is somewhat in a lull here, if you will, in the US. We're waiting for approvals on spot ETFs. Yeah. It just feels like we're range bound in a lull. There's really like nothing fresh coming out.
Well, except yesterday. Yesterday there was a big
right.
When CME opened, a huge gap down, which we haven't had in quite a while. Quite a bit of liquidations on Deribit and other exchanges, but I think CME was actually the catalyst for that. Actually, it's interesting. To your point, we're starting to see a lot of interest. So I think that the TradFi players, Nasdaq, CBOE, CME, London Stock Exchange, they're all looking at digital assets as a better way to settle faster and to have a global addressable market, have a TAM that's a global addressable market. And institutional products like BlackRock's ETFs, Grayscale's ETF proposal, Fidelity's now got a horse in the race, Bitwise, VanEck, WisdomTree, Invesco, and there was also ProShares and what is Beto, I believe, and then Grayscale are settling off CME futures. I think it is inevitable that will happen. We will have a spot ETF at some point in the future. I can't imagine a world where that doesn't happen. It's already happened in most other regions in the world. We're just kind of late to the party, but the United States is where the capital markets really run. So I'm excited for when that happens. And I think that that's really going to de-risk this for a lot of people and bring in, a wall of money.
Yeah, it's a great point. All right, Shawn, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much, Joe.